It's Monday, January 10th, 2022. A lot to talk about, ladies and gentlemen. Markets just closed a couple hours ago. I want to talk about what transpired today. Before we get started, make sure to give this video a thumbs up. Share these videos. Make sure that you're subscribed to this channel. Hit that bell notification so that you are alerted when the newest video drops. But if you like this channel, if you want to support this channel, give it a thumbs up and make sure you subscribe. But without further ado, let's get into what just transpired today. More questions about what is really going on behind the scenes. Earlier today, Dow Jones was down, I believe, over 500 points. I saw it down over 400. I believe it was down over 500. It closed down only 163 points. But what's even more interesting is the NASDAQ. It was down over 400 points, and it closed in the positive, up 7 points. So plunge protection team alive and well. The Fed's still involved in these markets. We're still watching market manipulation. We're still watching the magic tricks and the propping up of these markets. So I thought that was very, very interesting to watch this today. It should have been much, much worse. But as I was watching these markets, I'm watching Fox Business, and they did a segment on Rolls-Royce, the automaker, and how they're having a blockbuster year. Last year, blockbuster. This year, off to the races, predicting another record-breaking year. And they had a guest on, and he said that this is just a sign of a good economy. That Rolls-Royce is selling more cars than ever at an average of $360,000. That this is a good sign for the economy. That this is a good economy. A sign that the economy is doing good. I almost fell out of my chair. It's doing really good for the top 1%. But do Rolls-Royce record-breaking sales reflect your situation? How about record yacht sales, record jet sales, record multi-million-dollar home sales? Does this really reflect your economy? Does this reflect Main Street? Or does it reflect the top 1% or the top 0.0001%? So again, the audacity of people to come on a business channel and tell you and I that Rolls-Royce record sales are a sign of a good economy. Unbelievable. I mean, it's really embarrassing almost that somebody would say that. Article today on CNBC, Goldman Sachs predicts the Fed will hike rates 4 times this year, more than previously expected, which was going to be 3 times. They're saying it's going to be 4 times. I can't even believe that that would be possible, but that's what they're saying. The estimate comes amid rising inflation and a tightening job market. Goldman also sees the Fed shrinking its bond holdings very soon. This would be an economic kill shot, ladies and gentlemen. It is obviously any rate hike at this point is not going to help these markets. Not probably going to help the economy much, but who will it help? Well, the faster they can destroy the economy, the faster they can destroy the markets, the faster the BlackRocks, the Blackstones, the Vanguards, all this institutional money, the mega hedge funds can come in and scoop all of this up. And this is why I make videos on a daily basis of why you should be your own central bank, be your own BlackRock, why you need to be holding cash right now and assets, and why you don't want to be holding debt, because there are big sales coming. Look, they're going to raise rates. How many times and how much? I don't know. Nobody really does. It is going to send this economy, if they raise these rates enough, it will send this economy into a Great Depression. And it's unavoidable, ladies and gentlemen. Either we deal with a Great Depression or we are going to deal with a world reserve currency, the US dollar, which will go to zero. And we are going to see a Zimbabwe, Venezuela type environment. So either way, as I've said many times, we're going to deal with some serious, serious pain here. Me personally, I'd rather deal with a depression than a Zimbabwe a Venezuela type event, because I don't believe we could come back from that. We lose our world reserve currency status, we are done. So I'd rather hang on to our status. bring some purchasing power back to the dollar by raising rates than doing the opposite. And I think that's the only way we even have a chance. Jamie Dimon sees the best economic growth in decades, more than four rate hikes this year, he says on CNBC. He said that his confidence stems from the robust balance sheet of the American consumer. Again, I almost fell out of my chair listening to this. Stock market investors may endure a tumultuous year as the Fed goes to work. I agree with that. The consumer balance sheet has never been in better shape, he says. He says consumers are spending 25% more today than pre-crisis. My question to Mr. Dimon is, where's the money going to come from now? They were spending money when they were getting benefit checks, when they were getting stimulus checks, $1,400, $2,000, $600 benefit checks, $300 benefit checks, extended unemployment. That's all over. Now, Mr. Dimon, where's the money coming from, as most Americans have eaten through their savings and now are dependent on using the equity they pulled out of their home or the credit cards now that we see the amount of credit card use just absolutely skyrocketing. The amount of Americans now solely dependent on credit cards to pay for essentials, pay for their bills. Credit card debt is skyrocketing, not a good sign. But again, Mr. Dimon, where is the typical American going to get the money to continue to prop up this economy? I'll tell you, they're not. The stimulus money is over. Inflation is here. It's going to continue to go up. And when this Fed begins to raise interest rates, when they do begin to tighten and taper, this spells very, very big trouble. Here's another article today on CNBC. Petition for $2,000 monthly stimulus checks has 3 million signatures. Americans need some certainty, says restaurateur who started it. Mr. Jamie Dimon says that the American consumer has never been in better shape, but 3 million of these consumers signed this petition for $2,000 monthly stimulus checks. So yes, we have a lot of jobs out there, over 10 million jobs available, but most of these jobs are minimum wage. Most of them are not 40-hour work weeks. Most of them do not pay benefits. And the cost of living continues to rise, and these jobs are not keeping up with the cost of inflation, the cost of living. Mr. Jamie Dimon, the billionaire, I think he's completely out of touch here. And I think that, signing petitions for $2,000 a month stimulus checks, what kind of world are we going to be living in if everybody's quitting their jobs and everybody's sitting at home waiting on a stimulus check? You want to see what happens to the world reserve status of the US dollar. You want to see a Zimbabwe. You want to see a Venezuela. That's all you need to do, is just give people money and wait, because you're gonna blow up the whole financial system, capitalism, what's ever left of the free market, what's ever left of the US dollar. It will all be gone, and people have no idea what they are dabbling with here. And it's very, very dangerous. Nearly a quarter of workers plan to quit in 2022, report shows. They're quitting jobs, ladies and gentlemen. I see for hire signs everywhere, and I do see a lot of for sale signs everywhere too on these buildings, because many of them are empty. But I'll share that with you. Last night I went to an El Pollo Loco for dinner about 6:30 in the evening. If you don't know what an El Pollo Loco is, it's a flame broiled chicken restaurant, and not really that great, to be honest with you. But I felt like some flame broiled chicken. And I went there about 6:30, 7 o'clock last night. The place was shut down, not one light on, nobody in there, completely closed, empty. So we are continuing to watch the ramifications here of food shortages and a labor shortage. And this restaurant could not open. We called another restaurant the other night for takeout. It was Panda Express. Most of you know what Panda Express is. And when you go to a Panda Express, they literally have like 100 items on their menu, right? And we went online to make sure that it was open, the one in our area, and they were open, but they only had 4 items on the entire menu: crispy almond chicken, chow mein, fried rice, and white rice. That's it. That's all they had. So we went online, checked another one that was a little bit farther away. Same thing. 4 items, printed that out. 4 items. That's all they had on the menu at Panda Express a couple nights ago. How in the world are these places going to exist past 2022? Leisure and hospitality is dead on arrival, ladies and gentlemen. With the amount of people not traveling, with the labor shortage, the food shortage, you cannot run a Panda Express with 2 types of rice and some vegetables. It's just not going to work. You cannot run an El Pollo Loco being closed. We checked out another restaurant same night for Italian, and they're closed. They were just closed. And they said they will be closed for the next few days. Again, last time I was in there, one of the employees was complaining that they had no workers. He was the one waiter literally servicing the entire restaurant. And so they're closed for days now. How in the world? So that means they have to throw away their food. They're not bringing in any revenue for 3 days, but their rent doesn't go down, right? If they're even paying rent at this point, that place is in big trouble. So we had to go to another restaurant. So we went to another Italian restaurant, and let me tell you, it was probably the worst Italian food I've had in my life. Now, granted, I did grow up in Chicago, and it had some of the best Italian food in the world, but this is the worst Italian food I've ever had. The chicken Parmesan was maybe 1/8 of an inch in width. It was as dry as shoe leather. The spaghetti, I've never seen brown spaghetti. The calamari was not even real calamari. And I'm not even going to tell you what I paid for takeout. And I know people are going to say, why am I not staying at home, cooking myself, which I am doing more than ever, ladies and gentlemen. But sometimes if you had a long day, if you've been busy all day, you've been working, and you just don't want to cook, or you just don't have enough here to cook, and you just want to go get something, or you just have a taste for something, whether it's Panda Express or Italian or broiled chicken, you just want to get it. But this stuff, I mean, the places that are open are more expensive than ever, and the food absolutely it's horrible. It really is. Again, this place I went to, the worst Italian food I've ever had in my life. They should be ashamed of themselves. But anyways, I could rant on, and again, I probably could start a food channel, but there's fewer and fewer good restaurants in my area. Another article on CNBC: mortgage rates just jumped again. Here's what that means if you're buying a home. Title of the article: average rate on a 30-year mortgage hit 3.64% this morning. Now, here's an example. If you put 20% down on a $350,000 home, you will now see a monthly payment $125 higher than 3 weeks ago. That's really interesting. Last Monday, the 30-year rate was 3.9%. And again, today it's 3.64%. But at some point, rates are going to get up there. And I think once they hit 4% or break over 4%, maybe it's 4.25%, this is going to have a drastic, a very negative effect on the housing market. No doubt about it. We are beginning to see the housing bubble deflate. We're seeing the market cool down. And I'll tell you, I think once we get to that 4.25%, we're going to see a big, big change in the housing market. Now, what if we hit 5-6% on a 30-year? What do you think that's going to do? It's going to price a lot of people out of this market, and it's going to make cash king. Another article today: crypto suffer worst start to the year than ever. That's on The Hedge. Yahoo Finance: crypto diehards are about to find out if it really was a bubble. Your thoughts? Look, I don't hate cryptos. Let me know your thoughts. Bitcoin right now is a little bit over 41,000. It dipped below $40,000 today. Does this mean anything? Is crypto in trouble? Let me know your thoughts. Again, for me, if you don't hold it, you don't own it. I'm continuing to buy more gold. That's what I believe in. I believe we're heading into a massive Great Depression. I believe we're going to see a lot more inflation coming. I believe, even though I'm stockpiling dollars, I believe that the US dollar is on borrowed time, and I'm betting against the debt. And how do I do that? I bet against the debt with gold, with silver, especially gold. And I truly do believe gold and silver are on a blue light sale, the two most undervalued assets on planet Earth. People ask me where I buy from. I buy from SD Bullion. I have a link down below. Check out the link, SD Bullion. You can buy from anybody you want. You can buy, there's 100 different places online you can buy gold and silver from. You can buy it at your pawn shop. You can buy it at a coin shop. I bought from them all, ladies and gentlemen. But SD Bullion has been the best. They've been reliable. They get my metals to me quickly, and they're easy to deal with. So if you need a recommendation, SD Bullion down below. Last article, wolfstreet.com. Buyers strike finally. Dynamics of crazy used vehicle prices weaken. Used vehicle sales in December fell 5.5% from the previous December. And the supply of used vehicles increased. So it wasn't anything to do with a lack of supply, because the supply of used vehicles actually increased while the sale of used vehicles decreased. So very interesting. So I do believe that as soon as the semiconductor issue gets taken care of, we are going to see auto dealerships flooded with cars. This means we'll see a flood of used vehicles. Prices will have to come down. But then the question arises, if people are quitting jobs, if people aren't working, if people aren't earning a real wage, if people are paying 40, 50% of their income on rent or mortgage, how are they going to buy cars? And again, what happens to this housing market when we begin to see inventory tick up and interest rates tick up at the same time? Prices are going to come down. And we're going to see, I think, people trying to get out. And these people who bought a house the last year or two, I think they're really going to regret what they did, because I believe we're going to begin to start seeing inventory. And I don't give financial advice, but if you're in the market and you're thinking about selling your property, this might be the time to do it, because I think you're running out of time. Again, if people are not working, if they don't have a real income, if their wages are not keeping up with inflation, they're not going to be able to buy a house. They're not going to be able to buy a car. And I don't see the economy getting better. I see it getting much worse. And in regards to this massive housing bubble, rates are going up. This could prick the bubble. And when that bubble gets pricked, what's everybody try to do? They try to sell. They try to get out. It's going to be too late. And I think that we're going to see the biggest housing collapse in U.S. history. And I look, ladies and gentlemen, we are in a place we've never been before. So much overvaluation in bonds, stocks, automobiles, housing. This thing's going to do 180. When it does, it is going to just tear the face off so many people. So let's keep our eyes open, pay attention to what's going on. And I think right now you have to exercise patience and control. Put some cash away, put some assets away, exercise patience and control. A lot of people, were, I need to buy a house. It's gonna, I gotta buy, this crypto. I gotta buy this car. It's gonna go up forever. All bubbles burst. All bull markets correct or crash. And this bull market is going to crash harder than any we've seen, in my opinion. So get ready, ladies and gentlemen. I would keep my powder dry, get my ducks in a row, because I don't know if it's going to be 6 months from now, or a year from now, or 6 weeks from now. Nobody knows. But we're going to see big changes coming to these markets and to this economy. So I'm going to leave it there today. Have a phenomenal rest of your afternoon. God bless you all. Please make sure to subscribe, give this video a thumbs up, and I look forward to talking with all of you very, very soon.